Whoa! Up, down, sideways. Just when you think you've got it figured out, bam! Another massive swing. We're talking about Bitcoin, the digital currency that's been on a roller coaster ride since day one. But this isn't just random chaos. There's a story here, a wild history of booms, busts, and everything in between. Why has Bitcoin's price been so incredibly volatile? What events sent it soaring to the moon? And what caused those stomach-dropping crashes? And most importantly, what does this crazy past tell us about its future? Welcome, fellow finance enthusiasts. This is Finance 101, Simplifying Finance, one concept at a time. And we are your guide, and today we're diving deep into the fascinating and often frightening history of Bitcoin's price. Understanding this journey is crucial whether you're a seasoned crypto trader or just curious about this digital phenomenon. What we're looking at is the incredible price journey of Bitcoin. From virtually nothing to hitting six figures on some exchanges. Why should you care? Because this history reveals the powerful forces that move this market, the risks involved, and potentially even hints at what lies ahead. Who are the main players in this drama? We have Satoshi Nakamoto, the mysterious creator who envisioned Bitcoin as a currency for daily transactions. But it quickly attracted traders and investors betting on its price swings. And let's not forget the market sentiment, the collective enthusiasm and fear that can send Bitcoin on wild rides. How did all this happen? We'll trace the key events, the rallies and the crashes, and the underlying reasons behind them. When did this all begin? Bitcoin was introduced in 2009, and where did it all unfold? Primarily online across various cryptocurrency exchanges, but its impact has been felt globally, influencing the world of finance. In its earliest days, Bitcoin's price was essentially zero. It wasn't even really traded. Think of it like a brand new invention that nobody quite understood yet. But then, in October 2010, something shifted. The price started to creep past its long flat line of less than 10 cents. By the end of 2010, it had reached 30 cents. What sparked this initial movement? It was the first signs of demand. People started to see potential in this new digital currency. It was designed to be used for daily transactions, offering a decentralized alternative to traditional banking. Let's explain this simply. Imagine you invent a cool new digital sticker. At first, nobody wants it, so it's worth nothing. But then a few people realize it's actually pretty neat and start trading it. Because more people want it, the price goes up. But this was just the beginning of a much bigger, much more volatile story. What happened next would shock many and solidify Bitcoin's reputation for dramatic price swings. 2011 was a year of explosive growth. Bitcoin's price surged past $1, reaching a peak of $29.60 on June 8th. It was like a rocket ship taking off. Early adopters were celebrating and the media started to take notice. But then, the villain of our story made its first appearance. Market instability and speculation. The price came crashing down, ending the year at around $5. This was the first taste of the brutal crypto winters that would become a recurring theme. Why such a drastic fall? Early cryptocurrency markets were still very young and easily influenced by news and sentiment. A few negative headlines or the collapse of an early exchange could trigger panic selling. Think of it like this. Imagine that cool digital sticker suddenly gets some bad reviews online. People get scared it's not worth anything, and everyone tries to sell it at the same time, making the price plummet. But Bitcoin wasn't dead. Like a phoenix, it would rise again, demonstrating the resilience and the underlying belief that kept some investors holding on. 2013 witnessed another incredible rally. Bitcoin started the year around $13, crossed $100 by April, and then $200 by October. But the real fireworks were yet to come. In November, it broke the $1,000 mark and closed the year at a staggering $732. What fueled this boom? Increased investor enthusiasm and growing demand. More people were hearing about Bitcoin, understanding its potential, and wanting a piece of the action. It was becoming more than just a digital currency. Some saw it as a way to store value. Imagine that digital sticker suddenly becomes super famous. Celebrities start talking about it, and everyone wants to own one. Because there aren't that many available, the price skyrockets. The years that followed saw more volatility, including sideways movement in 2018 and 2019. And then another surge in 2020 fueled by the COVID-19 pandemic and government policies that sparked fears about the global economy. Bitcoin ended 2020 at nearly $29,000. The period from 2021 to early 2025 has been nothing short of dramatic. We saw Bitcoin smash its previous records, reaching all-time highs multiple times, fueled by institutional interest and the excitement surrounding the potential of Bitcoin spot ETFs. The long fight for these ETFs finally concluded in January 2024, opening up Bitcoin to a wider range of investors. This was seen by many as a major victory, a sign of Bitcoin entering the mainstream financial world. However, this also brought new dynamics, with significant fund inflows and outflows causing market adjustments. Think of it like this. Before, only certain people could easily buy and sell that super popular digital sticker. Now, big investment companies can create special packages that allow anyone to invest in a bunch of these stickers at once. This makes it easier for more people to get involved, but it can also lead to big buying and selling waves. We also saw events like the Bitcoin halving in April 2024, which reduced the reward for mining new Bitcoin, impacting its supply. And in late 2024, we even saw speculative price surges based on potential regulatory changes and political events. So, what does all this tell us? Bitcoin's price history is a story of incredible volatility, driven by supply and demand, investor sentiment, regulatory developments, and even global economic events. It's a reminder that while the potential for high returns exists, so does the risk of significant losses. The villain of unpredictability remains a key characteristic of the Bitcoin market. While events like ETF approvals might suggest growing maturity, the fundamental drivers of its price can still lead to sharp and sudden movements. Understanding Bitcoin's price history isn't about predicting the future with certainty. It's about recognizing the patterns, understanding the forces at play, and making informed decisions in a market that has proven time and again to be anything but ordinary. What do you think the next chapter in Bitcoin's price history will hold? Let me know in the comments below. And if you found this deep dive helpful, be sure to like this video and subscribe for more insights into the world of finance and cryptocurrency. Thanks for watching.